Welcome back to my podcast, the Home Loans Network, powered by the Real Estate Deal Room. If this is your first time tuning in, I am Ebony Beco, mortgage strategist and mortgage loan officer. This podcast I created is designed to break down mortgages, real estate financing, and home ownership that you can understand it very simple, especially if you are a first-time home buyer. So with that being said, in my last episode, which is a 3-part series, that was the first part, this is the second part, I went over 15 common questions that first-time home buyers generally ask. Well, today I'm going to answer an additional 15 common questions that first-time home buyers ask. So instead of you paying for a first-time home buyer class or course or even seminar, guess what? You can get it here with me for no cost. And yes, I love answering questions. So with that being said, let's jump right in. One of my common questions, and which is a huge misconception I get, is FHA only for low-income buyers. Absolutely not. It is very much not the reality and not true. FHA loans are not income restricted. They are designed to be more flexible with credit, especially if you don't have the best credit or you're reestablishing your credit. The down payment requirements is not as strict. The income levels is not as strict. Of course, with every loan program, there's a debt to income ratio, which is the DTI. And I want you to always remember that. That debt to income ratio is based upon how much income you have and make and what you bring it in compared to what your actual liabilities are and then what the potential future mortgage liability is going to be. Add that all together, you got your debt to income ratio. Now, many buyers with solid incomes choose FHA just because of its flexibility and the lower down payments. So yes, you can have the best credit and the best income, but you wanted a lower down payment. So yes, with FHA, you do not need to be a low income buyer. Anybody within reason when it comes to their qualification and criteria can qualify for FHA. Now, can I use an I-10 instead of a social security number? It depends. If you're a U.S. citizen, you should not be using an I-10 because you have a social security number. However, yes, in certain cases, there are loan programs available for buyers who file taxes using an I-10. These programs are designed for borrowers who contribute to the tax system but may not have a social security number, meaning Uncle Sam did not grant you a social security number, but yet they like, hey, you working, so you still need to pay us taxes. With that being said, you get an I-10 number. So proper documentation and lender selections are the key. Working with your mortgage broker, they would pretty much know what mortgage companies or lenders that actually accept I-10s. Do not get upset with your realtor if they do not know, because their job is not to really know that portion of it. That's why we have our own lanes and we generally try to stay in them. What's the minimum down payment for each loan? Well, let me break that down. FHA loans typically requires 3.5% down. Conventional loans requires as little as 3% down. VA and USDA loans may offer 0% down. Now, understand there are down payment assistance programs that can actually help reduce these amounts even further, depending upon the eligibility. And so the reality is when it comes to these different programs, even though I said 3.5% down because the lender, the FHA lender is approving you for 97.5%, please note that there are closing costs that's not taken into consideration. So if the loan amount is $150,000 and the lender only lent you 97.5% of that, you still have to come to the closing with a 3.5% plus the closing costs, unless you got some sort of seller contribution or down payment assistance. And I pretty much talk about that throughout the podcast, but even in some of the previous questions. So continue to stay tuned and listen. Now, what is pre-approval? And do I need that first? Well, a pre-approval is not a pre-qualification. So just don't get those two mixed up. Totally different. A pre-approval is what you need to see. A lender, or not even a lender, a realtor needs to see to make sure you qualify to go see a property. And let me say, when I say qualify to go see a property, because anybody can go see a property, but it don't mean a realtor is going to be willing to show you a property without their pre-approval. In addition to that, that pre-approval tells you what property, as far as price-wise, that's within your price range that you should be going to see based upon what the lender said. You should not be going to see a property that the lender said you're only approved for $150,000, but you're going to see a property for $400,000 unless you have the difference in a down payment for that. If you do not, stay with what the lender said. And to be honest, sometimes just because you're approved for $150,000 does not mean you should be out there looking for $150,000. So with that being said, you want to get a property that you feel that you can most afford, that's comfortable for your situation or your current situation as a whole. So the pre-approval is what you need to know to be able to qualify for a certain price range. The pre-qualification is only when you've given the information verbally, but it has not been verified. So you're pre-qualified to proceed to potentially apply for the purpose of getting a pre-approval. The next question I get a lot is, how long does the honeymoon? Well, when you first buy a property, there's a honeymoon stage. Then it goes downhill when you realize you own it now. But how long does the home buying process take? The home processing can take actually 30 to 45 days. It just really depends. But if you're getting, let's say, a down payment assistance program, then that may be another thing that can prolong the process. For whatever reason, make sure though, when you are doing your contract, do not have the realtor to put 30 days in there for closing, the contingency date. Try to put 45 days in there for the contingency date, because it might be a time whereas for whatever reason, maybe you are doing a first-time home buyer down payment assistance, maybe you're waiting on income tax, whatever that case may be. You need to make sure that you're not doing a contingent date that's too soon, 15, 30 days, because if they do not extend that contingency date, you can lose your earnest money. So to be on the safe side, your contract, you want to do it for about 45 days for a contingency date. And then if it needs to be extended an extra 7 days or 15 days, then at that time between you, your realtor, as well as any attorney potentially involved, they can go ahead and ask for an amendment to the contract to extend the contingency date. But the home buying process, for the most part, takes 30 to 45 days. It just depends. Now, what happens if I get pre-approved? Well, after you're pre-approved, you can begin shopping for the home within your approved price range. When you find the right home, you submit an offer, you negotiate terms, and once under contract, the loan goes into full underwriting. That is where like all the documentation is finalized and the conditions are cleared. And the documentations, it's usually like the income verification documentations. Whatever you put on that contract, whatever you put on that application, which we call a 1003, whatever it is, your banking information, the amount you have in the bank, 401ks, whatever you put on that contract needs to be verified. So if it cannot be verified, do not put it on the contract, because if the underwriters see it on there, the underwriter is going to ask. And the funny part is, you may not even need all of this stuff that you volunteered on your application. And if you don't provide it, you can potentially kill your own deal. So only put on there with what's actually needed. Now, who should I talk to first? A realtor or a lender? I'm telling you up front, you need to talk to a lender first. A lender is going to help you understand your numbers and what you qualify for, the loan options, your payments that you're comfortable with. This actually prevents you from simply falling in love with a property and that property don't fit in your budget. So the reality is, you talk to your lender first, your loan officer, and you want to make sure that they understand what you're trying to do and how your income work. And why I say how your income work, because maybe you're a server, or you're a bartender and you're making $8 an hour, right? Here's the thing. There's a lot of bartenders that make over six figures, that makes 100,000, that makes 125, that makes 250 or $250,000, depending upon your market and type of restaurant or bar establishment or club establishment that you are in. So with that being said, then your underwriting is going to be slightly different. And then based upon the loan officer you work with, they will know what bank that will actually accept that. And real quickly, I noticed I said bank. Here's the thing. If you actually go to your bank, it's strictly going to be them. No more, no less. So if you bank at BMO, it's strictly going to be BMO. If you bank at Chase, it's strictly going to be Chase. If you go to a mortgage broker, and for the record, if they don't do that type of loan based upon your income, then you just got to, the deal is denied and you just got your credit ran for nothing, which can kill your dreams of home ownership. However, if you go to a broker and you speak with your loan broker, your mortgage broker, someone like me, I can tell you what you can qualify for, what type of program is going to work for you based upon your income. So if you're someone that, have crazy income or a lot of different requirements that is needed and there's like a funky situation, most of the time you need to go to a broker, because mortgage brokers works with different type of lending institutions that you generally cannot walk right in yourself to get the deal done. And they work with investors who can actually fund these loans for you also to make your home ownership dream come true. Now, what's next? What type of documents will I need? Well, most buyers will need income documentation such as W-2s, pay stubs, or tax returns. They also would need bank statements, but it also, like I said, depending upon the program. And of course, an unexpired photo ID and have your credit ran. So a borrower's authorization needs to be signed to have your credit ran. So even if you are in a different state, like for me, for an example, I am licensed to do loans in 11 different states. And so, of course, I'm not going to see you, but I will generally email you a borrower's authorization, giving permission to either pull your credit report, or you will receive a link whereas you're pulling your own credit report, but you still, no matter what, a borrower's authorization needs to be on file, because like I said, this gives the mortgage broker and the banks the chance and opportunity to be able to, pull your tax transcripts. That's why I said everything needs to be verifiable. If you say you make $200,000 a year, it needs to be verified. Even if you have tax returns, they are going to do a 4506 or 8821 with the IRS, and that's something that you generally will have to sign along with the borrower's authorization, but you generally sign that after the application, the 1003 application is done and the borrower's authorization is done. From there, once you start providing documents, that's when the ball gets rolling. Now, the next question, can I shop for a house before getting pre-approved? I mean, you can window shop, but a realtor is not going to take you serious, just so you know. Like, they're not, because you don't even know what you qualify for. Like, you could literally go look at a home, but you really should make no offers without a pre-approval. And most realtors are not going to let you make an offer without pre-approval. And a lot of realtors are not going to even show your property without a pre-approval. Here's the thing. The pre-approval is going to protect your time, strengthen your offer, and ensure you're shopping realistically. What can I actually buy with my budget is another common question first-time home buyers ask. Your budget is going to depend upon not just the purchase price, but it will also affect the type of property, the location, and the monthly payment. Loan programs, interest rates, and assistance options often allow buyers to afford more than they actually initially expected, while actually still staying within a comfortable range. But just because you still feel like that's a comfortable range, only you know your real situation, what's getting ready to happen in 6 months. Are you going through a divorce in 6 months? Whereas you felt like based on your income, you did qualify, but now you're going to take on more debt. Do you plan on having children? Those are personal questions that can never be asked, but those are answers that you know mentally and privately yourself. So just because you can afford a payment of $5,000 a month does not mean necessarily you should be actually getting a mortgage for a payment for $5,000 a month. So your budget is what the bank says, and then you take that budget of what the bank says you can afford monthly, and you ask yourself realistically, can I afford that, or should I kind of slim it down just a little? Another common question, can I buy a condo, townhome, or multi-unit property? Yes, you can, but there are guidelines to each one, and they vary to everybody's situation. So everyone's situation is going to be totally different. Do not let no one on YouTube or your friends or family tell you what type of property you can buy based on your credit, because no one knows your credit profile and your situation but you. Condos and multi-unit properties often have additional requirements, such as, the project needs to be condo approved, and then there's owner occupancy rules, right? So for an example, if you have a condo building where it's 80% renters, it's a possibility that the lender is going to deny it when they get the condo questionnaire back, because they don't want to lend in a condo building where there's predominantly renters. So sometimes the rule might be 20% renters and 80% okay, but you don't know that until the condo questionnaire comes back, and then at the same time, what lender is being used and what that lender says. The right loan programs is going to make a big difference, and that's why it's really important, to be honest with you, go to a mortgage broker. Like I would, unless you're just buying a single family house, you're a straight W-2 employee, you don't need no extra income, you're not looking for the down payment assistance. Like if your stuff just straight to the point and your credit is good, then go to the bank, call it a day. Do I need a home inspection? I would strongly recommend one. The only time I don't really recommend a home inspection, to be totally honest with you, if you're a real estate investor and you're looking for a fix and flip, of course, we know everything is wrong with that property. So don't even matter. It needs to get completely gutted out, demoed out, everything in there needs to be replaced. So getting a home inspection is just a waste of money. However, if you're a first-time home buyer and you're buying a home for you to live in, right? That's going to be your primary residence. And this is not no fix and flip. You want to get a home inspection. It definitely is going to help you when it comes to potential issues with the property and protects you from costly surprises. Also, with a home inspection, you getting a home inspection makes it easier for you to ask the seller, well, not you directly, but your realtor, to ask the seller, can they fix some of those things that's in a home inspection? Or can it be part of a credit? You have that right to ask that, but you wouldn't even be able to ask that if you don't have documentation. That's why you notice I keep saying documentation. Everything needs to be verified. Everything needs to be documented. Paper trails are everything. So as far as an important part of home ownership, I will highly suggest you get an inspection. The next question, what happens if the home appraises for less than the purchase price? Then you got to come up with the difference, or to be honest, renegotiate the offer and, make the determination from there if you want to go ahead and proceed. But a low appraisal, a low appraisal really doesn't automatically kill the deal. It really doesn't. Options may include renegotiating the price, challenging the appraisal, restructuring the loan, or even just bringing additional funds to close. There are often solutions available depending upon the situation. Now, if you're willing to bring additional funds to close, just know once the underwriters see that the house is not appraised out and you're willing to bring that extra money, they're going to say, hey, where's that money coming from? And that money needs to be verified and documented also. And that became really strict because of 9/11, the Patriot Act. So with that being said, everything needs to be documented. If you're bringing an additional substantial amount of money to closing based upon the property not being appraised, the lender is going to ask you for additional verification of funds. Now, can the seller help pay my closing costs? Yes, they can, and most of the time they can. Seller concessions are actually common and can significantly reduce the amount that you actually owe and needs to bring to closing. This is actually negotiated as part of the purchase contract, and is also it will help kind of depend upon the loan program that you go through, as well as the market conditions. And when I say the loan program that you go through, some lenders will say the seller can contribute up to 6%. Some going to say up to 3%. It just depends. But once again, that's when you talk to your loan officer, not your realtor, on this, and say, I'm going to be honest. This is all I got. This is all I got in reserves. This is all I can get a verifiable gift for. With that being said, I, need to know which bank that I can go to for the purpose of asking the seller to contribute the maximum amount of closing costs. One of the big common questions I get, this is one I get every day, all day long. What would my interest rate be? Well, we don't know right now, okay? Your interest rate depends on several factors, including the market conditions. So you can get locked in an interest rate for 30 days, but if you close after 45 days, guess what? That interest rate is a possibility. It's not going to be the same interest rate. Your credit profile is going to make a difference. What your credit score is, the loan program that you're going to choose is going to make a difference. If it's FHA, if it's conventional, if it's VA, if it's USDA, if it's a hard money loan, right? It makes a big difference. And overall, the financial picture. So your interest rates is going to depend upon so many different things and so many different variables. So if you hear somebody say, well, the interest rate is 5.75 and my friend got an interest rate for 6.25, why is mine 7.5? There are so many different factors that made it like that. So please don't compare your situation to anyone else's situation. Just know that rate changes, but the strategy of how it's done is most important. The goal is to really secure a rate that fits your long-term plan, not just like today's cycle. But at the same time, if there's a house that you really want and you sit there trying to wait on the rates go down, you may not never, ever, ever get the house that you want. So I always tell people, if you see a house that you like, if you know that this is where you want to be at, maybe because family live in the area, whatever the case may be, this is like rare for this particular property to become available, get it. Don't wait for the rates to change to what you're looking for. I always tell people, marry the house, not the rate, because you can always turn around and refi in the end and get the rate that you're looking for down the line. Even if it's because you're waiting on the market conditions to change, or you need to make some like credit repairs and adjustments to your credit and overall your lifestyle to get that rate that you want. So with that being said, if you're listening to this episode and realizing that buying a home may be more achievable than you thought, you're actually right. Like, it really is. Do not let nobody tell you you cannot own a home. Education removes all of fear, and clarity will build your confidence. And I always tell people, and my clients and borrowers and buyers, you're only good as the information that is provided to you. Just always make sure that it's verifiable. And the individuals that's giving you the information, make sure you can look them up and Google them and research them to see that they are actually real and they've done this before, doing this, or been there, done that. If you're a first-time home buyer and you want to understand your options, your numbers, and your next steps, I encourage you to take actions. Join me every Wednesday at 7 p.m. Central Standard Time for Wind Down Wednesdays, live on YouTube at the Real Estate Deal Room for first-time home buyers. Specifically, the first and third Wednesday of the month is where I focus on my first-time home buyers. And I'm sorry, the second and fourth Wednesday of the month is when I focus on my first-time home buyers. The first and third Wednesday of the month is for my real estate investors. But if you want to be like that real estate guru and know all things real estate, join me every Wednesday at 7 p.m. Central Standard Sharp and at the Real Estate Deal Room on YouTube. This is where I actually answer all real estate and mortgage questions live. I walk through different real scenarios and I help buyers and real estate investors make informed decisions in real time. So make sure you subscribe to the Real Estate Deal Room on YouTube, turn on your notifications, and come with all of your questions. Thank you for tuning in, and I will see you every Wednesday at 7 p.m. Central Standard Time.